Welcome to Crypto Flywheel, the podcast where we spin up strategies to turn your digital efforts into unstoppable momentum. Now, let's get the flywheel turning. Good evening, Professor X. How are you?
Good evening, Digital X. I'm doing well. How was your day?
Day went well today.
I mean, I'm actually looking forward to today. I couldn't wait until we got on today because we were going to get into a real interesting banking scenario. So, yeah, go ahead and take it away there, Digital X.
Okay, today what we have is we have how banks are funded for international remittances and payments. So what we're going to talk about today is, I'm sure our audience, some may know, some may not know, but I wanted to just throw out this content just in case. So what are Nostro and Vostro?
Digital X, before you go further, I just wanted to ask our audience for this particular episode to stay with us, because this is very important in what the content that we've been talking about in the previous 6-7 episodes, how it relates to the real world banking sector. So please stay with us. Go ahead, Digital X. Sorry about that.
Okay, so what are Nostro and Vostro accounts? Let's break this down simply. Imagine you're running a bank in the US. Call that Bank A, and you need to handle payments in euros for customers trading with Europe. You can't just magically transfer money across borders without some setup, right? That's where Nostro and Vostro accounts come in. These are basically special banks accounts that help banks deal with foreign currencies and international transactions. So, example, Nostro account. This comes from the Latin word hours. It's an account that your Bank A in the US holds with a foreign bank, let's say Bank B in Germany, in the foreign currency euros. So Bank A, which is your bank in the US, deposits some US dollars, converts them to euros, and keeps the euro balances in Bank B. This lets Bank A, your bank in the US, quickly pay or receive money in euros without constant currency conversions or delays, right? Think of it as Bank A saying, this is our account over there in your bank in Germany. So Vostro account, this is a flip side from the Latin for yours, meaning yours. It's the same exact account, but from Bank B. The Bank B is the bank in Germany's perspective. Bank B sees it as your Bank A in the US account with us in Germany. So while Bank A calls it Nostro, Bank B calls it Vostro. So ours, Bank A, ours, and Bank B, yours. So Nostro, Vostro. It's all about viewpoint. It's basically like how a road between two cities is the same, but each city might name it different. So in short, these accounts are tools for corresponding banking, where banks partner up to handle cross-border stuff like wire transfers, trade payments, or currency exchanges. Without them, international banking would be a mess. You know, it'll be slow, it'll be a mess, expensive conversions every time. Picture it as banks having wallets in other country currencies to make global more smoother. So with this, the system has limitations. They're not perfect. So there's issues that happens with Nostro and Vostro. That's basically what I'm saying. So first issue is tied up capital and liquidity issues. Banks have to keep a bunch of money sitting in these accounts just in case transactions happen. So this is called pre-funding. Basically, Bank A wants to send money to Bank B in Germany. So let's say they wanted to send $1 million. They have to have funded $1 million in Bank B sitting there in order for that to happen. So that's basically what tied up capital and liquidity issues mean.
So Digital X, let me jump in here really quick to kind of give a firm understanding, even with myself, for our listeners' understanding. So you're saying that if I wanted to send $1 million in a day over to Germany, bank, which would be Bank B, should have Bank A, which is ours, US dollars, in their account. They need to have $1 million that day in their bank account in order for me, user, our depositor, to send over to another country $1 million in, and for that person that I'm sending it to gets that $1 million into their hands that day.
Well, this is another thing. There's delays in the process too. Let me go over this and then I could explain that better. Okay. So like I said, there's system limitations, right? So there's costs. So first thing is tied up capital and liquidity, which is pre-funding. We have to pre-fund these accounts in order for money to interact with necessary individuals that you are sending back and forth, right? So second thing is cost, maintenance. Maintaining these accounts isn't cheap. There are fees for setups, transactions, and ongoing management for this. So plus, if interest rates are low on the balances, banks aren't earning much on these parked monies. So there's issues with these, right? So then there's rate risks. Currency value fluctuate. So the money in a Nostro account,
sitting idle.
Yeah. So the money in a Nostro account could lose value if the foreign currency weakens against the home currency, right? So this adds uncertainty and potential losses. Now there's also issues with delays and errors. So banks on both sides have to constantly check and match records like balances on like balancing a checkbook, but across time zones and systems, right? So this can take days. So even though you have money funded in each account, because of these issues, these delays can take place, leading to mistakes, disputes, or even fraud risk, right? So in a fast-paced world, these delays slow down global trade. So then there's complexity, right? So with accounts scattered worldwide, banks deal with different regulations, with time zones and systems. So it's inefficient, especially for smaller banks that might not have the resources to manage it all. So overall, these limitations mean the system is clunky, costly, trillions are trapped in liquidity globally. So this is where the problem rises. So as you were saying, you were sending money to Bank B in Germany, $1 million, and you were asking if it was going to get funded immediately, right? So the answers to these is because of all these limitations, the funding doesn't happen immediately. It takes time because they got to validate the whole process, right?
Right. So essentially for the banks, this is not ideal. Yeah, they can't use it because it's locked up in the event a transaction comes through in the form of $1 million. So they can't use that $1 million. It has to sit in their Vostro account. And then, like you said, reconciliation is manual, and it's extremely slow in the legacy systems currently. We talked about ISO 222 and what that implications are for that ecosystem. This actually solves that. You know, that slow clunkiness that you were referring to, Digital X, that goes away, right? So
there's a lot of ways we can improve this. So how can we improve Nostro Vostro?
Stablecoins, you mean?
Yeah, stablecoins. That's going to be in the form of a stablecoin, right? Even it depends which countries want what, stablecoins or CBDCs. It's going to end up settling. Actually, this Nostro Vostro is more related to CBDCs, right? Okay. So the main issue with that is money is being locked up where it can be utilized elsewhere, correct?
Correct.
That's where the inefficiencies and the problems with the banking sector lies. And as well as when you're sending money over cross-border or internationally, let's say you have family in another country or you want to make payments to one of your suppliers or vendors in another country and you are sending these funds, it becomes very expensive, correct, Professor X?
Yeah, Digital X, you're exactly right. These inefficiencies that take days, and sometimes even when there's errors, it can last weeks to resolve. So yeah, you're absolutely right with that.
Yeah, and so I remember you were telling me the other day about the blockchains that allows these inefficiencies to alleviate these issues. which blockchains and which rails were being worked on for this banking sector, right?
Yes, exactly. What I was alluding to was this exactly, the Nostro Vostro accounts from the ISO 222 ecosystem. So that presents an efficiency strategy for the banks. Now, banks are adopting this stuff behind the scenes right now, right? So nobody really knows. None of that is in mainstream media telling us, hey, this is what's going on. This is one of the inefficiencies that are being addressed by this ISO 222 ecosystem. And the coin that we mentioned was XRP and the XRP ledger. XRP is what's going to provide the on-demand liquidity that is required for all these parked and idle money to no longer be there. And they can actually be more efficient and make more money as a banking system.
Yes. Also, so the efficiencies are dealt. I mean, these are problems that currently with the SWIFT system, right? Right, Professor X?
Yes. When you talk about the problems, you're talking about the ecosystem and everything that the ISO 222 messaging. Basically, what's happening is it's telling the banks before their opening hours, or, it doesn't require the banks to be open. The messaging system, ISO 222's messaging system, tells them what needs to be done with the money on the chain, on the ledger itself, on the distributed ledger itself. So you don't need human element to actually settle that transaction.
Yes, I understand. Okay, so when do you think all this is going to be updated?
Well, this is ongoing right now. So you see that there is absolutely these ecosystem coins and tokens are staying, in terms of value, it's staying sideways, right? Mm-hmm. Why is this happening? This is part of what the legacy systems of ACH or SWIFT is being superimposed onto the distributed ledger technology and the various blockchains that are in that ecosystem for the bridging of this on-demand liquidity, where Nostro and Vostro accounts are not going to be existing anymore. So this creates an efficiency for the bank where their money can be made daily and they don't have to worry or account for these Nostro and Vostro accounts in their banks. So it's going to be a more fluid, efficient system where less errors are there and less time to reconcile everything. So I-222 is currently in process. 2026, you'll see this thing move really quickly.
Okay. And so since they already passed the Genius Act and waiting for the Clarity Act, you think, is that when all this takes place? I guess after they pass that?
Yeah, absolutely. Because, the thing is that the Genius Act, and it addresses the stable coins, right? So you mentioned that it could be a CBDC, but more so it's privatized. I believe that it's going to be every private stablecoin issuer is going to, whichever ones that is. So I would say RLUSD, because XRP Ledger is the foundation of this ISO 222 ecosystem, and they themselves have issued, from the U.S. Nostro standpoint, RLUSD, which is pegged, it's Ripple's United States dollar. It's pegged on the dollar. So that is going to be, and it's already, we've seen that go surpass $1 billion in transactions already in volume. So that's going to be, in my opinion, is going to be the main player that's also got clarity and regulatory clearance as well. I think RLUSD would be a stable coin that's private, more so, but in the ecosystem where there's regulatory compliance and oversight by the CFTC and various other banking institutions, IMF, the BIS, specifically the Bank of International Settlements, they've already adopted the XRP Ledger and the ISO 222 ecosystem. So yeah, I think that there's going to be a huge influx of this stablecoin usage,
So I can't wait for this to take adoption and,
Yeah.
It makes life a lot more simpler for a lot of these businesses and individuals.
Well, from our listener's standpoint, this needs to be comprehended in the day-to-day activities. And if you are planning on investing into the new ecosystem and the digital asset space, you need to comprehend what ISO 222 represents. It's a tremendous amount of idle money that's going to enter into blockchain, into this new asset class. That inherently is going to drive up the prices for every single token and coin that is involved in facilitating this new digital asset class. So, especially in the financial world, right? So, understanding, having a firm understanding of that, and the crypto flywheel will definitely be talking about this down the line.
Yeah, we would definitely revisit 222 coins that are selected as a standard. Just because they're coins doesn't mean they're ISO 222. You have to be compliant. It's just a messaging standard compliancy that they have.
Right. And as a recap, I know that this is extended a lot longer than we intended, but I want to just recap what we just talked about. So Nostro and Vostro accounts were built for a world where money moved slower than information. With ISO 222, the information it's data-rich information that's moving way faster than before. So today, information moves instantly. The entire financial system is now trying to catch up. That's essentially what's happening behind the scenes. ISO 222 gives money a richer language, artificial intelligence gives it foresight, and stablecoins give it mobility. So tokenization gives it efficiency. The future of cross-border finance is not louder, it's quieter, faster, and more automated. So following the crypto flywheel, we will be talking about this in our day-to-day experiences, because we're also involved in the RWA space, as well as educating students or investors that want to know more and navigate through this space with confidence and clarity. So that's all I have from my standpoint, Digital X. Do you have anything further to add?
That's perfectly said, Professor X. No, you covered it all.
Thank you. Thank you. So with that, the crypto flywheel is coming to an end today, and thank you.
Thank you.